Today, Bitcoin moves higher as Fed Chair Powell says it's time for U.S. monetary policy to change. As Vice President Kamala Harris accepts her party's nomination for president, we talked to Better Markets' Dennis Kelleher, who says that she should not embrace the crypto industry. And Wyoming Governor Mark Gordon walks us through why his state is looking to create the first U.S. government-issued stable token. By noon Eastern, Bitcoin jumped 1.8%, now above the $61,000 mark. Ether crossed back above $2,600, and Solana rose to $144. Now, over the past 7 days, Bitcoin gained about 2.8%, while Ethereum added about 1.7%. Fairly modest compared to recent swings in those assets, but it is still on track to beat the S&P's rise of 0.8%. Okay, politics has been front and center this week with the Democratic National Convention taking place in Chicago. Just last night, Vice President Kamala Harris accepted her party's nomination for president, saying that she would be a realistic president who focuses on common sense. Thursday's finale to the DNC caps off an unprecedented month for Dems and for the vice president, who rocketed to the forefront of the Democratic Party and brought a wave of enthusiasm with her. Now, in terms of crypto, that enthusiasm comes in part from the hope that she could take a much different stance on the industry than President Joe Biden. Bloomberg reported earlier this week that the VP could support emerging tech like crypto in a potential administration. But there are some who are cautioning the vice president to resist calls for her to take back this industry. Dennis Kelleher, the CEO of Better Markets, wrote in an op-ed ahead of the DNC that Kamala Harris should not cave to the overtures from the crypto crowd. Our Brandon Gomez spoke to Kelleher about that piece and about how Vice President Harris's opponent, Donald Trump, is embracing the crypto space.
So look, I was reading through this op-ed. Kamala Harris should not cave to overtures from the crypto crowd. Industry lobby groups seeking a lighter touch from the CFTC regulation rather than SEC oversight. We've been following the DNC this week. Not a lot of mention of crypto there. So it seems like at least the advice that you're offering is being heeded. Why should she not be sort of leaning into this crypto craze?
Well, look, I think first and most importantly is crypto is not among the top 10, 20, or 50 concerns of the American people, frankly. The industry's put out a lot of propaganda about exaggerated numbers of Americans who care about crypto. But the Fed has surveyed this, the Federal Reserve, and only about 18 million Americans have even used or owned crypto. And there are, 340 million Americans? So there's very, very few people who care about this. And it's interesting, of the 88% of Americans who have heard of crypto, a supermajority, 75% of them, have a negative or hostile view of crypto. And really importantly, if you're running for president, there was this great survey that showed between 61 and 75% of voters in 6 of the key swing states have a negative view of crypto. So there's a lot of reasons, but primarily the American people, the vast majority of them, don't care about it. Secondly, look, after 15 years of effort and claims that crypto has some value or use, there's still no legitimate, valid, socially acceptable use of crypto. It's used by financial predators and criminals worldwide. The least harmful use of crypto at the moment is just wild speculation and gambling. And even that is mostly resulting in wealth extraction, not wealth creation. There's a third reason that Vice President Harris should not bother with crypto, and that's because it has a lawless business model. It's basically it takes the position that the securities, commodities, and banking laws don't apply to it. And Vice President Harris, when she was Attorney General and District Attorney, and even as Vice President, has a long and strong record of investor protection, consumer protection, and financial stability. She stood up to the banks, and she's leaning into that in the campaign now. And she stood up to be a protector. Again, she's against junk fees and protecting investors and consumers. That's the opposite of crypto. And finally, and importantly, crypto targets, preys upon, and victimizes communities of color disproportionately. Look, they're rightly skeptical for decades of discrimination against them. They're skeptical of the traditional financial system appropriately. But that doesn't mean that the gimmick of crypto, which actually is going to cost more money and make them lose money more than the traditional financial system. And therefore, they're being victimized disproportionately. And that's another reason why Vice President Harris should stick to the core elements of the financial system and the banking system, support them, and support a growing economy that creates wealth rather than extracts wealth, and stay away from an industry that has no valid use, that's largely used by criminals and predators, and disproportionately hurts communities of color.
There's a lot of points to unpack there, and I definitely want to get through at least a handful of them, obviously. But I would like to start off with the idea that of crypto's use case, right? Because there is this narrative and there is a lot of institutional buy-in with a lot of the spot Bitcoin ETFs and ETH. So some Americans, granted, perhaps Americans on the margin, given how many actually are invested in or concerned with crypto matters, might be saying, well, look, there was the FTX collapse, Sam Bankman-Fried, we sort of uncovered the underbelly of the crypto industry. And now it seems like the institutions are sort of retaking the narrative, reclaiming the narrative, and trying to find, as you're talking about, a legitimate use, a stable coin, say, that's federally regulated. I mean, are those conversations all for naught, or is that actually a direction that this industry could go that would be a positive, that maybe a VP Harris ticket could make comment on?
Well, look, I think Vice President Harris, like everybody else in the current administration, are all for innovation and new uses in technologies, whatever they may be. Look, innovation is the fuel that drives our economy, that creates businesses, that employs people, ideally raises living standards and creates broad-based wealth. But all financial products have to be properly regulated and have customer and investor protections. And if the crypto industry wanted to bring itself within the law and stop breaking the law and comply with the securities laws, the banking laws, the commodity laws, like every single other financial industry in the country, right? They're looking for special treatment. They're claiming they're special and they don't have to follow the law and they want special treatment. But everybody from the biggest banks on Wall Street to the smallest broker in the smallest town in America comply with the securities, commodities, and banking laws. Only the crypto industry says not us. So, look, that has all generated, that matrix of laws and rules has resulted in very well-regulated markets in the United States. They are the envy of the world, right? But it's well-regulated markets that allow industries to grow, innovation to flourish, jobs to be created, but it requires investor, customer, and financial stability protections at the same time. And if crypto wants to actually adopt and follow the law and adopt customer, investor, and financial stability protections, they'll be welcomed with open arms. The problem is that it will crush their profit margins. They have a predatory business model that generates outsized predatory profits. And that's why they're using those profits to buy politicians, to get special interest legislation, to get the veneer of legitimacy from regulation. But what they want is the least capable, smallest, least funded regulatory agency, the CFTC, that they can capture and have the appearance of regulation without the reality of regulation. If they were serious about becoming a legitimate business, they would welcome regulation by the SEC instead of viewing the SEC as their mortal enemy.
So, and I find it interesting because on that note, I would sort of pose the question to you if you feel that former President Donald Trump, although he is being sort of portrayed now as the crypto forward-thinking candidate of the two slates, of the two tickets, by that measure, what you're talking about, more regulation for sustainability of the industry, I mean, should he be viewed as the more crypto forward-thinking candidate?
Well, I'm not saying more regulation. I'm saying they should not be treated specially and get special non-existent regulation or the appearance of regulation without the reality of it. We're not saying they should be regulated any more than anybody else. We're saying the securities laws, the commodity laws, and the banking laws apply to everybody. As to Donald Trump, look, He has a for sale sign around his neck. Any audience he's in front of, he'll promise them anything if they'll give him campaign contributions. He said, crypto, I support you. Give me a campaign contribution. He went to the fossil fuel industry. He said, I'm going to get rid of all your regulations. You should send me $1 billion. He went to the CEOs and he said, you should support me because I'm going to lower your taxes. So yeah, in the campaign, he has said he's going to be favorable to crypto. But nobody can take that to the bank, pun intended, if he gets elected, because he's made a promise to anybody who will give him a buck.
Now, at the same time, big name Republicans are embracing crypto and looking for ways to bring the technology to their constituents. Wyoming, often a leader in crypto innovation, passed a bill earlier this year that created the Wyoming Stable Token Commission. Now, the goal of that new group is to create the country's first U.S. government-issued stablecoin. The push for this stable token comes as many in the crypto space grow cautious of a central bank digital currency, or CBDC. So while at the Wyoming Blockchain Symposium, just days ahead of the Fed's own meeting in Jackson Hole, Crypto World's Tanea McKeel spoke to the state's governor, Mark Gordon, about the project and what he hopes it will do to benefit Wyoming residents.
We've been talking this week, and I've spoken with some colleagues of yours about the Wyoming Stable Token Project. It's very exciting, very, forward-thinking, unsurprisingly, for a state like Wyoming. What does success of this project look like to you 5 years down the road? Because I imagine that there are a bunch of challenges, and it's new and it's intricate. So what does success look like to you?
Well, so I think success is adoption of understanding a domestic stable coin, stable token, and having a system that's transparent, that is fully backed by our short-term treasuries, that's dollar dependent. And I think one of the big things for me is to be able to bring back onshore a lot of our debt, because if it's bought by treasuries and supported by treasuries, it will help to stabilize that market to a degree. It is clear to me that digital assets are going to have a future, and it has been something I've talked about for some time, that the United States has to address this issue. Washington's being a little bit stodgy, which is why Wyoming, being a nimble and entrepreneurial state, can make a difference.
What inspired this? I was doing some reading. I know this goes back about a year or so. How did this come about, this idea?
So Wyoming has really put a marker down on building a kind of a universe. I've had over 30 bills that I've signed. There's been some effort beforehand to try to figure out things to do with digital. We have what we call our special purpose depository institutions, speedy banks. We've tried to, Wyoming has a long history of innovation, from the LLC being built here in Wyoming and so on and so forth. The stable token came up about 2.5 years ago. The first iteration of it was one that I couldn't support because I think there was a whole bunch of hype around it and what it was going to be able to accomplish. I didn't feel that Wyoming had really thought about it carefully enough. So when the second iteration came, and what we're doing now is to make sure that we have a fully transparent, fully backed digital stable token that we hope to be able to release Q1 of 2025. And we've really taken a deliberate approach to it. Being aware of the fact that there are federal regulatory pressures that might be challenging, we've wanted to do that in full light of what they're looking at, plus to be able to understand what their new regulations might be so that we can adopt a policy that'll make it easily acceptable.
Q1 is coming right up. I understand you're making a bunch of new hires to help get this in place, talking to potential vendors, thinking about which platforms, which blockchain networks this is going to run on. What are some of the biggest challenges that you're facing in such a short period of time?
Well, I don't think the technology is all that difficult. I mean, we've seen a lot of people that have already been able to stand these things up. As I say, I think for adoption, I think the most important thing is being confident that it's well regulated, that it's domestically transparent, and that we are able to move forward in a very methodical way. These are the challenges that need to happen. In terms of what chains we're going to go on, we're going to start with one and then be able to adopt it a little bit further. In terms of the platforms, I think that's the other piece. The know your customer and anti-money laundering, the AML, KYC pieces are going to be a little bit more challenging for us, and that's one of the things we're really working on. But we have been, we have not been idle over the last year. We've been very aggressive.
There are different types of stablecoins out there, and a concern in the past has been around a depegging, which happens, and for various reasons, market events, that does happen. So, what do you say to people who are concerned about that? What kind of measures do you think that you'll be putting in place to avoid that to the extent that you can?
Well, this is fully reserved. And part of what we've been working out with Flavia Naves and others helping to advise us, she's on our commission, is to make sure that we can fully back whatever it is we're going to do. And plus the fact, I think our legislation says that when a person buys a treasury or a repo, we're going to have that in evidence. You're going to be able to see that. So hopefully we can avoid the depegging issues that come.
I don't want you to speak for other jurisdictions here, but we've seen a Miami coin, an NYC coin. How is this? I mean, so many ways probably, but first and foremost, what is the big differentiator here, and how do you convince people that it's not going to be like one of these previous projects that we've seen?
Well, I think the measured approach that we're taking, number one. I mean, early on, people were saying, oh my gosh, this is going to be a great consumer tool, and we're going to see huge amounts of money that the state's going to make off of this and everything else. Along those lines about sort of the come. What we said was we want to make sure the mechanics of how we run this are clear and understandable, that our regulatory package is appropriate and can handle the issues that are there. Nobody has the same set of legislation that we do. We're really out in the lead there. We've got Nebraska following. We've got Colorado. Governor Polis is always talking about how he wants to follow that. There's other states that have done that as well. Frankly, we feel strongly that because Wyoming's being thoughtful and because we're being careful in how we approach this, and because we're doing it first within the state of Wyoming, where we can avoid some of the federal interference, that we'll be able to make an offering that will be ultimately very attractive.
Okay, that's all for Crypto World this week.